So then, yeah, good morning, everyone. Thank you so much for coming to today's Technical Tuesday session, where we primarily talk about what's taking place in both the Euro USD and US dollar Japanese currency pairs. I'm actually going to share with you guys a few trading ideas on those particular pairs, but what we primarily go over is technical analysis. You know, we show you guys what's happening technically in on the chart. You know, where's supply and demand, how's price moving, and then from there we sort of create a scenario, or pretty much we sort of create an idea of what we believe will take place in the market. So then we're definitely going to do that on this morning. But good morning, Brandon. Good morning, Stuart. Thank you guys for coming. But I guess we can just move forward right now and talk about the Euro USD or the fiber. And right now we're looking at the weekly chart. And one thing I want to say about the Euro, you know, the Euro USD is that really over the past few weeks, it's been pretty difficult really trading this pair. It's been kind of hard just to find a bias for this particular pair, mainly due to how price has been moving recently. There's been a lot of news, a lot of information hanging over the market. And typically when it's like that, then you won't really see a sustained move in a particular direction. Price will mainly consolidate. And that's what's been happening primarily on the Euro USD. But we're looking at this weekly chart. And we see that on this weekly chart, there's been primarily a bias to the downside. You can see that it formed this head and shoulders, and then price has been tumbling ever since this head and shoulders pattern was formed. But you can see that this move, the moves are pretty limited even over this last few weeks. If you just zoom in in this section right here, you can see that, you know, these candles pretty much, it was pretty limited. There was wicks on both sides on especially these last three candles, which leads us to believe that there was some indecision in the market, or the market was really trapped within a range. And you'll be able to see that more clearly on a smaller time frame. But from here, what we want to do is go down to the daily time frame. Let's do that now. So right now we're looking at the daily. Let me stretch this out so that we can see it. Okay. So right now we're looking at the daily, and what we can see here is that, you know, price, you know, tumbled lower, and it formed this double bottom, we could say. You know, it tested the lows right here, which is, I believe, the lows for 2019. Tested this 2019 low, couldn't break below it, and we saw price push higher and expand higher. The only thing about this movement higher is that we did not get a higher high and a higher high and a higher close. This was the last high from this double bottom. Price pierced this level, but it didn't break and close above this level, which means that we should still have a bias to the downside. You can see that price has been making lower lows, lower highs. It's been trending to the downside. So then, based off of what I see right now, and based off of price not being able to push and break this level at 1.1085, it couldn't break above it. We didn't see a break and close, a candlestick close above this level. What this leads me to believe is that the bears still want to maintain control, and we could still see further sliding to the downside. So then what we're going to do is do some technical analysis. For starters, what I'm going to do is draw in a trend line. So then we have this trend line here from this high all the way down to these highs right here. So then let's draw this trend line right now, this descending trend line resistance. So then we have this descending trend line resistance, and really I believe this is really a channel. Let me just clone this right now. Clone this line, and let me drag this below. This fits, and it pretty much does. It pretty much fits. So then we have, of course, this line was tested here, and it was tested here. So then we can see that the Euro USD is still trapped, or it's pretty much maintained within this channel. We see price traversing back and forth between channel support and channel resistance, but ever since price tested this high up here, we can see that price has been mainly in consolidation. It's been mainly trapped within the range. We can define this range. Let me just draw this in right here. We can pretty much say that from here to here has been the range, and then also up here from here to here we've been having this range. Price has really been trapped within this range over the past few days on this particular pair, making it kind of hard to predict what's going to happen. But you'll be able to see this range a little bit more clearer on a smaller time frame like the 4-hour or the 1-hour time frame. Let's drop down to the 4-hour time frame. Okay, so right now we're looking at the 4-hour time frame, and as you can see, we can see this range. This price has been going back and forth between this resistance or this area of supply and then this area of demand right here. It's been bouncing from support and also falling from this resistance. So that's something for us to be mindful of. Price has been trapped within a range, and really, in order to really know for certain what's going to happen with the markets, we would need to see price. Well, price pretty much already did it, but yeah, we still want to maintain our bias to the downside. All right, so then what I'm going to do is drop down to the 1-hour chart because I want to show you something about this move lower right here. So then we drop down to the 1-hour. Okay, right now we're looking at the 1-hour, and what I want to do is point out something. What we see is the harmonic nature of the markets. The market typically moves very symmetrically and very harmonically. What was done before may be done again. So then we see here that we have this impulse leg lower. Let me just draw this in right here, this leg right here. And what we sort of have is almost like an equal measured move. It's not exactly an equal measured move. It's more so like a 2-3-6 measured move, which is something that members of our private community are familiar with. But what we have is this. It's really called a 2-3-6 measure move. It doesn't go all the way, but it's near where this extension is. If price was going to have a full extension of the previous wave. So then whenever you see that, then you know that you need to wait for a correction in price. So then right now, we're looking for this correction to take place, and really it could take place anywhere within this particular zone right here. Let me just draw this in because we see that we have support right here. We see that we have this consolidation, which is resistance. So then what we want to do is actually draw in this zone from this high all the way down to the middle of this congestion area right here. So then let me just do that right quick. Let me just draw in zone. And let me change the color for you guys. So then let's do it from this high right here. From this, from this low right here where we see these wicks, where I got the cursor, from this low all the way down to the middle of this congestion area. And then we're just going to drag this out, even down to these lows right here. So then we see this low right here function as, support. We have price going through this low. And then, of course, this low right here is functioning as resistance. But, we define this range. We define this zone where we're expecting for price to eventually reverse and for the sellers to eventually take control. But what we're going to do is look for bearish confirmation in this zone. We're going to look for an opportunity to short. But a better way, if you really want to play it safe before you go and short, what you could do is just wait for price to break this low. You could just wait for price to fall lower and slide lower and break this low right here at 1.0984 before you decide to go short. But we may find an opportunity to go short right here. We may see bearish confirmation somewhere within that, somewhere within this zone that can support a reason behind why we should go short. So then, if anyone wants to know what this zone is, let me just drag this down a little bit. This zone is really between 1.0998 or pretty much the 1.100 institutional level and the 1.10 sort of 15. So then let me just type that in for you guys. We could just say zone of reversal, and let's do 1.10, which is a psychological institutional level, to 1.1015. So then this whole zone can function as an area where you can look to sell. So let me just put that look to sell within this zone. All right, so then yeah, we're going to look for an opportunity to sell. Now, what would our target be? Well, our target okay, let's just put it like this. What we can do is keep it really simple and just target these lows right here. We don't have to shoot for extended targets. Just target the lows. Let me just right around here at 1.0970. You can just target that level as a target for this particular trade. So yeah.
Yeah. Good morning, everyone. This is me, Marvin. Of course, I'm letting Melvin facilitate the Technical Tuesday session for today. But one thing I wanted to point out is that, of course, there's a unique, methods and different ways you can identify or try to find out what you want the projected target to be. And we typically go through that with, some of our members, those that are part of the Forex Anatomy private trading community. There are special procedures and a way to identify where specifically price will go, the area that it will go, and when you execute a trade. But for the sake of this technical analysis session, we're just going to shoot for the lows, target for this area near support, around this 1.0970 area, and that would be our take profit target for this particular trade scenario.
Yeah. Now, one thing I want to do also is point out another way you could decide to engage yourself in this trade. What we can also do is something like this. Let me just draw this in right now. You can wait for price to break below this trend line right here. Just wait for price to break below this trend line. If you see a break below it, then you can decide to execute that sell if you want to. Even though there's other entry confirmation entry strategy that we use that's a lot better than waiting for a trend line break. But this is something that you could do if you want, that bearish confirmation. You can just wait for price to break and close below this this ascending trend line right here, and then execute your sell, and then target the lows down here.
Yeah. Yeah, and one thing I wanted to add for those of you guys that are deeply conservative traders, you're not as aggressive, you're not about picking tops and bottoms. You may want to wait for further confirmation. So then let's say in this particular zone of supply up here, you see some type of reversal pattern, or signal showing that the market would be bearish. Then what you could do also is, wait for this ascending trend line support to break as further confirmation. Like if you don't feel comfortable entering, if there's a particular signal,
like there's a bearish candle, like let's just say there's a nice bearish candle,
just a strong signal showing that there's some type of change in conviction. Let's say you see that up here within the zone, and let's say you're not ready to jump into that particular position because you don't like picking tops and bottoms to some degree, even though most trading is sort of like picking tops and bottoms. But we'll get into that, on a later date. But what you could do is you can wait for your confirmation signal in this zone, but you can also wait for price to break this ascending trend line support, Or if you wanted to, you can wait for it to break this particular low here and then wait for some type of pullback.
Yeah.
But there's no guarantee that you will get that with the price behavior. But that's one way you can sort of confirm, or at least know for certain that this particular pair is determined to slide lower and test these lows here.
Yeah.
So then it's really left up to you to decide what type of trader you want to be and what type of risk profile you want to be. And
or you want to take. Yeah. So then, definitely, there's multiple ways to skin a cat. I know you guys heard of that saying. And it's similar with trading. There's multiple ways to approach the market. There's multiple entry reasons and entry signals and confirmations that you can use. There's multiple ways you can play the markets. But you just have to really find which one fits you. And that's why even within our private community, we go over a few that you guys can use. But one thing I want to point out, I think Marvin wants to share something else.
No, I was going to say, of course, everything we're sharing, is, of course, is probable. This is what we see may potentially happen on a technical basis, but we also got to keep in mind the current risk environment. We know that risk sentiment is skewed to the upside. There's a little bit of risk appetite with our futures going up, and even some of our other risk-oriented currencies leading for today. But that all matters, especially in trading currency pairs like the Euro USD, which is the most liquid pair in the Forex market. But just keep that in mind, even when looking for your bear signal here, that you do wait for confirmation, because, like I said, the markets are pretty. There's a lot of appetite for yield, so then we may see continued flows to the upside. But But
before we move on, what I wanted to actually share with you is a technical setup that you could pay attention to. Since we're on this chart right now, I might as well share it with you. But let me just draw this in right now. I'll just draw it in with this arrow. Okay, because we have this move to the upside right here. And then price retraced, or really this consolidation is really a retracement. And then we may have another thrust to the upside as well. So then what we're going to do is clone this line. And we're going to drag this right here. So then price could push a little bit higher. Actually, let me just drag this out a little bit higher to actually the 15 area. But it pretty much goes along with what we talked about as far as the zone that you need to identify. What we could see is a complex correction, which is called a what? Like, for those who are like, do we have any VIP members? What type of correction is this called? When you see this type of price action, or for those that may know, if this is going to be a correction, and then if we're going to expect for price to slide lower, right from this area, what type of correction is this? What is it called? I know, we talk about it sometimes, for those that are part of our VIP private community. But this is a certain type of correction that, you have to pay attention to in the markets. So, I know Stuart said a complex correction, and it is. But what this is really called, it starts with a letter or a few letters. For those that may know, it starts with a few letters. I just gave you guys a clue right now. But if you guys don't remember what that is, then it's okay. I can actually share with the group right now what this is. But what we see right now on this chart is a typical harmonic pullback setup. So then I know Brandon, he chimed in. He says ABC corrective wave. And that's exactly what we see. We see what you would call an what could potentially happen is an ABC pullback, or an ABC corrective leg, where we have leg A to B, and then it's really an ABCD corrective wave. But we have, this leg is leg A, then this is leg C, and then this is leg B, this pullback, and then this is leg C. But you can call it an ABC pullback. Some people call it an ABCD corrective wave because of the different points. You have point A, point B, point C, and point D right here, where the pattern will complete, and then you have price sliding lower. But this is what you would call an ABC pullback or an ABCD corrective wave. So price could extend all the way up to this area or to the highs of this zone that we identified, and then start sliding lower. But just pay attention to that. Whenever you see that happen, then just prepare for price to eventually start moving lower. But you may still want to wait for a break of this trend line before you decide to sell. And if price breaks this trend line, then place your stop loss right above these highs up here. Your stop loss will be somewhere, above these highs. So, yeah. All right. So, yeah, are there any questions about the Euro USD before we move forward? We're looking to sell, and somewhere within the zone. It can happen anytime. But I guess we don't have any questions for the US dollar Japanese yen. For the Euro USD. So I guess what we can do right now is move to our next currency pair, which is the US dollar Japanese yen. But what I first want to do is go to the weekly chart. So let me go to the weekly time frame. Okay. And let me go to US dollar Japanese yen. Okay, and let me clear this chart. We don't need this now. All right. So then right now we're on the US dollar Japanese yen, and we're looking at the weekly chart. And as you guys can see, it's been moving to the downside for the most part on the weekly. Of course, we had this low from the flash crash, from I believe 2018. And then from there, price popped higher, but from there we've been making lower lows and lower highs. I wouldn't consider this the low. Really, more so this area will I consider the low.
But if you look to the left.
But what we have is really lower lows and lower highs. And we can see that because price broke through these lows right here. Let me just draw this in so you guys can see it. Let me just draw in this line. This represents our support, our zone of support. Let me right around here. Right, support here, function as support here. But we can see that price broke below this support, and then creating a lower low, and then we had a correction creating a lower high, and then now we have this lower low. So then price corrected right now, and it's testing the 20-week moving average. This blue line right here represents our 20-week moving average. So then what we want to do is drop down to a smaller time frame to see what's happening. So then for the sake of time, I'm going to drop down to the 4-hour. And on the 4-hour, we can see that price created sort of like a topping type setup. We had price, it broke. Okay, let me just draw this in so you guys can see it. I'm just going to draw this in so you guys can clearly see what I'm looking at. So then we had this move. Well, I'll just go right here from here to here, and then price fell lower, created this move right here, pushed higher, and then it made a lower low and a lower close. So then from this chart right here, we can see that price broke and closed below this low right here. Let me change the color. It broke and closed below this low. So then right now, what we need to do is look for an opportunity to enter a short on bearish confirmation. And right now, we could be seeing that opportunity form really, really soon. So what we're going to do is go down to the 1-hour time frame. And what I'm going to do is draw in this trend line on the 1 hour time frame. Let me just draw this in from here. But I know this is kind of hard to see. Let me change the color. Let me change the color and let me make it, I'll just go with black. Okay. So then we have this trend line that price respected on this correction higher. And what we want to do right now is look for an opportunity to go short. So, we have this move up. In a nutshell, what we want to do is wait for price to break and close below this ascending trend line support. That's what we will do. But let me go to the 4 hour chart first. And let me share what could potentially happen. So then we have this move right here from this, which is considered a head, all the way down to the neckline. Price typically moves symmetrically. So then what we can assume is that somewhere within this zone or area, we may see price respect, or price fall or slide lower too. If you look straight across. If you look straight across, we can see that we have resistance right here. It was structure resistance here. And we have this congestion or this consolidation right here. So then what we want to do is place a marker right in this zone to identify this area as an area where price could eventually go to. So then right around here is good enough. So, and if you really want to play it safe, you could just target the highs right here. Just play it safe if you want to. But what we can expect is for price to go to this 107.03 area, which is near psychological support. The psychological institutional level of 107 flat. So then let me slide this higher just a little bit. Maybe 107.05 is good enough. So then this is what we're going to do. Right here, you can just wait for price to give you more bearish confirmation. If you see a break and close of this ascending trend line, which is acting as a counter trend line, if we see a break and close of this trend line, then what we can do is look for an opportunity to sell this pair and take it all the way down to this area right here. So then if we get a break and close of this trend line, you can look to sell and place your stop somewhere behind here. So then that's something that you can pay attention to. But we'll let you guys know if we do decide to enter this trade. If I do enter this trade, then I'll give you guys the trade signal in the signaling room, and I'll send it to you guys via email.
Now that's for those that are actually a part of it. You don't have some new people.
Yeah. So then, of course, what I typically do is I'll send it to the group or to the room, and then I'll also send it via email for those who may not be a part of the room. So then whenever these ideas form on both the Euro USD and the US dollar Japanese yen, I'll send those trades to you guys. But I guess that's it. I know we don't have too much to share with you guys for today. I know for today the Aussie really popped. The Aussie was pretty strong, and it resulted in us having a nice winner this morning. But what it showed was that earlier today there was some risk appetite. So then that's why we want to be careful with selling the US dollar Japanese yen. We really want to make sure that we're seeing a reversal in price take place.
Yeah. But, as we all know, things can quickly turn or shift the closer we get to the U.S. opening bell or the Wall Street open. So just keep that in mind, because often you'll see that switch in bias, so that turn during the U.S. trading session. So, yeah, at the moment there is risk appetite. There's some dwindling of some concerns regarding, the U.S. trade war. And of course, there's some recessionary concerns coming out of Germany with the Bundesbank mentioning that they're expecting the German GDP to contract during the third quarter, and that's creating some weight upon the euro. But for the most part, today we're seeing some relief in the markets. We're seeing there being some initiative to push assets higher. And of course, that will always benefit the assets or instruments that have the higher yield. And then we'll also see a sell-off in the Japanese yen. But things can happen, things can switch, just like I said, once the Wall Street opens. So then I'm expecting once Wall Street opens, we may see an escalation of headlines or new headlines that may contribute to a balanced bias or a balanced approach in the market. But I guess while we have a few minutes left, we can ask you guys, is there anything you want us to talk on? Is there any currency pair that you would like for us to review just quickly? Of course, these sessions are for you guys, to help you guys in any way we can, some of our free subscribers. So then if you guys have a question about anything or a currency pair, just chime in and let us know. We'll give you time to write about it, or post it in the chat.
Yeah, but if not, then we can definitely end today's session. Just pay attention to these trade setups when they do take place. Because I may be in front of the charts when they do happen, and I may not be. So then you don't want to trust me to send you guys the signals. Just be on the lookout for yourselves for these trades to play out in the market. But I hope this was helpful. I hope you guys got something out of today's Technical Tuesday session. If this stuff is going over your head and you're like, Melvin, I don't understand any of this stuff you're talking about, it's confusing, I'm bewildered, I don't even know what to do with the information you just provided me. If that is the case, then I would highly recommend that you join our private community. Join this community, especially if you've been struggling. I know last month, August, was a tough month for everyone, mainly due to how price typically moves in August. August is typically and historically known to be one of the toughest month of trading. So then if you did bad in August, let's say you have a huge drawdown in August, you can make up most of your losses in September and in October, because those are historically the two best months in the year. The two best months of trading in every single year are September and October. And then November is a close third. So then I would highly recommend, especially if you guys want to really see good results, get some training, get some education, even if it's not from us. We highly recommend that you get some education and take advantage of this time, because, during this time you could see certain setups form in the market that can provide some nice moves. But you still have to be careful. We still have trade war concerns, and there's always will be some level of uncertainty regardless of how the market moves and regardless of what has been done historically. I know historically we typically see September and October being the best months, but then that can change. You never know. So, but yeah. But anyways, I guess we can close out. If you guys haven't joined our private community, you can still join for $1. We still have that offer available. So then you can just go to forexanatomy.com/the lab and take advantage of that private membership. But that's it, guys. I don't have too much to share with you guys. Thanks again for coming, and we would definitely see you guys soon. And like we say at the end of every single session, remember to always count your blessings, not your pips. And we would definitely see you guys soon. All right. Next Tuesday, we'll have another Technical Tuesday session where we will share with you guys more information and more content on how to trade the markets. Now, thank you, Stuart, for coming. Thank you, Brandon. And thank you, Marie. Marie's actually, Brandon and Marie is actually two of our private VIP members. And thank you for endorsing us. You really do get loads. You get a lot of good information for what we're providing. Trust me, guys. There's a lot of bad groups out there that they don't really teach trading the right way.
A lot of misinformation.
A lot of bad information out there. And what we want to do is protect you guys from that bad information and to show you guys how to really make money from the markets. Like, it's really possible. You can really make money from the markets and grow your account via compound interest and make some good money and eventually become, I don't want to say financially free, but you'll free yourself up from the 9-to-5 job. It's very possible to get to that point. So then our job is to help you guys get there. And if you guys really want to get there, then I highly recommend that you guys join our private community. Just like you heard from one of our members, Marie, who's an outstanding student. She says she recommends us. You get loads of information and content and training for your buck. Even if you just join for $1, actually, that first month of information you'll have access to, you'll get a ton of information in that first month. Like the content, the videos, the video training. We get a bunch of praise because of it. So then if you guys want to test us out, join us for $1. And hopefully we'll see you on the inside. But I don't want this to be a strong sales pitch. I really want to help you guys determine what to do on the Euro USD and on the US dollar Japanese yen. So then just pay attention to these trade ideas, and we'll definitely let you guys know if we do execute these trades within the signaling room or via email. But thanks again, guys. We'll definitely talk to you guys next week. All right, stay blessed, stay encouraged, and we'll see you guys soon.